off by saying good morning and welcome to the second hour. It's still the second hour of TheoTrade. I am Professor Jeffrey Bierman. I'm broadcasting live from Chicago, and today is Thursday. It is October 23rd. It's 2025. Good morning, TheoTrade members. Good morning, Genesis Cog members. You've got to dial in here in an hour and a half at 11:30 because I got a lot to say. It's starting to really pick up and go our way. I told you, no, it's the most important factor in the Genesis Cog, patience, and most people have none. So good morning to the usual suspects. Hello, Edwin, you're new. Tim, you're here. Where's Guatemala and Rogue Bro? How are you? Julie, how are you? Ship, good to see you. I think Ship lives here. Michael Guiar, Chicago Dave. Where's Peter Schrader? And John Fleck, the two long-lasting ones out there. Trains, good morning. And Rodney G, good morning from Canada. Got a lot to say, and I've got so little time. We're going to pick up part 3 today of a momentum-based category. Remember, hey, Captain Vicky, I am the coaching session guy. I'm not the one who sits here and commentates on every single little move and subtle little bounce in the market. I could care less. I leave that to the other instructors who are experts at that. That gives me a headache. I have to reach for the migraine, the Excedrin migraine. I'm the coach. We're going to talk about momentum. We're going to do part 3 of walking the line, negotiating the new normal of trading patterns. People, the new normal is just lines. If you learn the word lines, I know people like cocaine, not cocaine, but lines, you can make a fortune. Good morning, Secret Agent Charlie, Wood Chopper. There's Guatemala. There's Pay Peter. And no, I'm not saying don't buy here. I'm not saying at all. Kevin Press, Peter, if you remember of Genesis Cog, you'd be making money every day this week. We've made money almost 10 straight days. We're doing really well. So let me get back to the market at hand here. And I've got a good commentary today. Pardon me. I'm going to have to go from the beginning slide. So without further ado, everybody sit back and enjoy. I'm here to educate. I am here to stimulate. I am here to make you think things that make you go, Peter, not a perma-bear. Stop. I'm bearish on certain things. Some of my positions are getting crapped on today. Loving it. And I'm bullish on others that are running. I was the guy who told you I'm loading the boat on oil drillers. Hello, I'm the only one in the United States who bought them. That's what the Genesis Cog does. We're way ahead of the curve on these people. I warned you. There's an opportunity there. You just got to find it. But we're going to talk about today's theme called hamster wheel. Now, I know all of you know what a hamster wheel is. I'm not challenging your knowledge of a hamster wheel. Please stop. Stop. Let's look at a hamster wheel. Let's look at it and stare at it, because this is like a stylized depiction. I could actually bring in a real hamster, but this is like a CGI, AI generated picture of a hamster inside of its wheel cage, the hamster wheel. So let me define what a hamster wheel is, and we'll go from there, and we'll integrate this theme into the market at hand, because a lot of you are buying here, and what I keep telling you is we're on the fringe of a blowout. We're going to blow out on this. We're close, but we're not quite there. The literal meaning of a hamster wheel, the literal meaning, okay, is a wheel, this one, in a fixed position that allows hamsters and other, pardon me as I get rid of this, and other small animals to run for exercise even when confined to a small space. So remember when you were a kid, because I had a hamster as a kid, you put the wheel in there, the hamster would grab on the wheel, run around, spinning around. But here's the thing. Well, the hamster's spinning around. Where's it going? Nowhere. That's the key. The hamster's expending a lot of energy. It's running up its heart rate. It's eating up a lot of calories. But the hamster's going nowhere. Welcome to the market, you permabulls. You guys and gals are going nowhere. And you know what happens after a while when you go nowhere. You go somewhere. Now, let me finish this off. There's an idiomatic meaning. Every time I come on here, I always present a double entendre. A double entendre is a French word, and I'll split it in half. Double, obviously in English, means two. Duo. Entendre in French, because I got a degree in French. I got a 5 on the French AP. I placed out of French language in high school. I was a translator for a while. Okay, entendre means to understand or meaning, double meaning. So the idiomatic meaning is a term used as an idiom to describe a repetitive, this market, and exhausting cycle of activity, often referring to a tedious task or way of life that feels unproductive, this market, similar to a hamster running endlessly in a wheel. The metaphor highlights the feeling of being trapped in a cycle. Get it, people? You're in a cycle of algorithms and they're going to turn on you eventually. So I'm warning you, you better get out before it turns on you because you're not getting out of this one. The more overbought we get, the more compressed we get, the worse it gets on the downside. It's going to be fast. It's going to be furious. It's going to start slow. It's going to rope you in, and it's not going to let you out. It's going to be like you're being trapped in a cage, like a hamster wheel. You feel like, I can't get out of this, and you're going to expend all this energy to keep buying these dips and realize it's not getting you to higher highs. So that's what it becomes down to. It's being trapped in a cycle of work or effort without making meaningful progress. Welcome to today's market, manipulated by algorithms, manipulated by the news media, manipulated by the Fed to convince us everything's okay. I can keep buying forever and ever. No, you can't. You're going to get caught with your hand in the cookie jar. You're going to get caught in that hamster wheel. I just want you out just enough to get out in time. So here is what I'm throwing out. Okay. I'm going to give you a little bit of like a taste of the Genesis cog, but it's not a Genesis cog day. There's one of my shorts that's getting crapped on if you had listened. Okay. And let's go to the mini. Now, I'm going to clarify and show Tony Rago, Don Kaufman, Blake Young, Brandon Chapman, Gianni DePoce, and Garrett Baldwin. I'm going to show every one of you why the market's not going down. The most powerful intraday time frame, number one, intraday, for what we call a smoothing factor, is the 4-hour MACD. I've never, ever been wrong on this if I follow it, but you got to be patient and you can't worry about every trade. Like, don't worry about second by second, minute by minute. It's useless. Stop. Who cares? Just get the smoothing factor down. You're in an algorithmic loop. You're in what we call the linear trap. It's linear. Now, here is what I'm telling you. Watch carefully. Right there where my pencil is. When that rip curls, when it rolls over, because it's going to roll over at some point. When? Tomorrow? Monday? I don't know. I don't care. I got all the time in the world, people. When it rolls over and it breaks underneath that signal line and breaks that zero line, okay, watch the pain unfold. You're not getting out of this one. None of you are. This is the last bastion you're going to have. The algos will buy every single dip unless it breaks underneath both those lines. That's the model. If it breaks, you're done. If it stays above, you're okay. Who wants to play a game of chicken? Who wants to play the game in Footloose where you're riding the tractor on the edge? Who's going to blink first? Guess what? I wouldn't waste my time. Were I you, I'd sit here, not short this. When it breaks, dive in and ride that to hell. Okay? It's going to happen eventually, people. This is the longest string out I've ever seen. And what's just more infuriating is that money keeps coming in. Every single dip is jamming money in the market. So no matter what you think on the candles, I don't care. Look at the money. If money's coming in, that's not going down. How is that going to go down? When the money goes down with it. When they both coincide, when they synchronize, that's where all of the bears just start going, we're making money finally. I feel you, Tony. Tony, Mr. Rago, Lego my ego. I feel you. But this is a bitch of a market to deal with. You got to let this cycle complete. It's a cycle. Let it finish whatever crap it's going through. When it breaks, get on it. That's how the Genesis cog has put up massive numbers this year just by singles and doubles. All we do is we identify breaking points and we attack them. That's how we do it with low risk, high return. Figure it out on your own. If not, then join the club. So here is what I'm bringing to you today. That's what I call, okay, the hamster wheel. When it breaks, goes underneath that 6,700, drops to 6,550, and when it goes through, it's all over. That's when Don's going to finally celebrate. Until then, I'm going to zip it. I won't even say a word. Don't even care. I don't care because everything I'm long or short is making a move in the right direction except for one position. Now, let's go towards the three major points today. Okay. Please don't come at me and send me an angry mail. Peter Schrader, I'm just the messenger. Don't come after me, Peter. Please. I'm just the messenger. A number of brokerage firm strategists and analysts have come out today and have vocalized and voiced their opinion based upon fact. I'm not the messenger of death. I'm not the doomsday. I'm not Nosferatu, people. I'm not. I'm just telling you. A number of these analysts say we are coming to a tipping point. What does that mean? It means this. We are now in the 23rd day of the government shutdown. It's not the longest shutdown by duration in the history of the United States. It's not. We've had twice as long a shutdown. But what it's saying is the shutdown is building inertia. It is building momentum. It is building negative momentum that could actually send the economy into a downward spiral. Now, I know a lot of you are like going, you're flipping me off. You're telling me with the L, he's a loser. It's not going to happen. Okay. I'm just the messenger. I'm just telling you what I'm tapping into the sources. They're telling us that every single day that the government is out of like work, okay, it takes off 0.1% off the GDP. So if a month goes by where the government's down, that will take off approximately 0.25% off the GDP. So what they're saying is, if the government is shut down for 4 months, that will shave off 1% off the GDP. In order for the market to continue its upward path, the GDP it's a rate of change. It must be above the 2 handle. That's a fact. If the GDP is 1.5, the market's going to roll over and tank. It's got to be 2% or higher. That's how this plateau works. This is what they call, okay, the upward integrity slope. If that GDP goes under 2%, we're going to see hell break loose. Right now, we're heading towards 1 month, which means 1/4% of the GDP has been wiped away. They're telling us, again, 3 to 4 months, and the economy is going to fall off a cliff. I'm telling you that if that's the case, if I were you, I'd get the hell out of that market now. Second is expendable. Okay, so here's the thing I want to throw out. AI, it's been reported, AI is already taking a massive amount of white-collar jobs. Everybody knows that. But the economists are saying there's much more to come. There's much more in the tank. According to a research report done by a number of firms, including Goldman Sachs, including firms like Blackstone and BlackRock, across the banking sector, the auto sector, and the retail sector, executives are warning employees and investors that AI is not only taking over their jobs, but these are permanent takeovers. What does that mean to you? It means that the rich are okay, but those at the lower levels are susceptible to what? Okay, they're going to spend less. They're going to get lower pay. They're going to be laid off, find lower paying jobs to survive. That's going to lower their ability to spend, and that's going to sink the economy. Beware of what I'm telling you. People are like, AI is great. Sure, it's great for the companies who are using it to make money, but what does that do for the broader economic people who are just the average schmo who go to work each day and lunch pail it? Not good, people. So what they're saying is, within tech companies, which include Amazon, Palantir, Salesforce, and the fintech firm that just came public called Klarna, okay, these companies have cut or plan to shrink their workforce due to AI adoption permanently. So if you've been laid off, here's what I'm telling you, your family, your kids, okay, I'm not going to sugarcoat this. They ain't getting a job in this industry. They better pivot and find a job somewhere else, because AI is making companies raise their margins, cut their costs, increase their sales. But potentially it means that the broader the workforce is going to be less and less needy, which is going to create an underbelly of people who are going to rely on the government for entitlements because the jobs just won't be there. Think about that. Recent research from Stanford firms suggests that the changing dynamics are particularly hard on younger workers, especially in coding and customer support roles. So I told my students yesterday, in no uncertain terms, if you come out of a job now, you're not getting a job unless you learn coding and unless you learn statistics. Every one of them ran out to the registrar to immediately enroll in those courses. They were in a panic. You're not getting a job. None of you are. You have to have coding, statistics, and some degree in finance, or you got no job. You have to know coding, because if you don't, you can't do AI, and you are not hireable. It's sad, but it's the truth. I'm 60. I don't care. I'm beyond that. I'm like at retirement. I can retire now, so I don't care. But if I were 20 years old, I'd be crapping in my underwear right now looking for a job. I'd say to the university, I'm going to go into IT. Got to get an IT, learn C++, Python, R, MATLAB. You've got to learn all these languages. My nephew is a computer programmer from San Diego State who graduated, got hired, got paid six figures. He got a job with a private company who has a contract with the government. There was 100 people interviewed. He was the only one hired because he had a massive resume of computer programming. Plus, I told him, bring a dossier and attach all the programs you wrote. He had like 60 or 70. Got the job. Straight A student, but it's because I told him, show them how you can program, they'll hire you. And they did. That's the future, people. AI is the future. Next, theater of the absurd. So this is how I know the market's in a topping formation. I wake up every day, and once a week, I get that 2x4 hit in the head. Like all I need to do is it's like a meme, or it's an icon, or it's a sign of the times, like a picture paints 1,000 words that captures the moment. Here's the one that every week I bring you something. This is this week's moment of stupidity. I call it theater of the absurd. And for those of you who don't know, I know what theater of the absurd is. Okay, it has to do with existentialism. It has to do with all the famous writers out there who basically it was founded in New York, theater of the absurd. All these really edgy existential writers were out there. Camus, yeah, they came up with the term, but it's also interchangeable with the term just is just stupid. Saturday Night Live with Leonard Pinth Garnell, which was played by Dan Aykroyd, had a spoof on theater of the absurd, which they called, Leonard Pinth Garnell's theater of the absurd. I loved it. Meme stocks are surging and investors are piling back in. There's your bubble. There it is. It's GME, it's GameStop, it's Bed Bath & Beyond, it's AMC all over again. Meat, buy and go out and buy, bid up Beyond Meat. That's how you know we're in a bubble. These are worthless companies that they're playing around, they're batting it around like a wiffle ball, just based upon structural imperfections built into the market. Do you think when our forefathers came to build the market around the buttonwood tree 250 years ago, do you think they came to say, hey, let's get people to buy crap and paper and air and we'll sell it to them and package it? Do you think that was their intention? These were honorable people who basically built the stock market to raise capital to make people rich on real palpable cash flows. When you hear Beyond Meat going from 60 cents to $8, that's called garbage in, garbage out. That is a sign of the times. That tells you that we're not that far off from this market imploding 10 to 20%. That's all you need. When people are, it's like the market is like a drug addict. It never learns from its mistakes. It's like it goes into AA and it comes out and just recidivists. It goes right back doing the same stupid crap. Avoid this garbage. Kaufman avoids it. Garrett, we all avoid this crap. I've seen people don't peddle this garbage to me. I've been doing this longer than anybody. I don't care about meme stocks. I'm not going to buy them. I'm not going to short them. I'm going to avoid them because they're not really real. They're just paper and fake and narrative. Be careful. I'm warning you. You have all the signs of a market topping formation. And when it rolls, I've given you 100 reasons why not to buy this market. Individual stocks from dawn to Musk. Yes, there's a pun there. I'm not going to be apologetic for it. From dawn to Musk, obviously Elon Musk. Now, here's the thing I want to put out about this stock. I am not anti-Elon Musk. I'm not pro-Elon Musk. I am completely, utterly neutral Elon Musk. I don't care what he does. I really don't. But let me explain to you how this works, okay? The company put out earnings today. which were 50 cents. They were above expectations. So why doesn't the stock run? Because if you go back 4 quarters, it goes from 72 cents to 50 cents. That is a 22-cent decline. Now, if this were a typical tech stock, like a CrowdStrike, if this were AppLovin, that stock would crash. It'd be down 200 today. It would. But this is Tesla. This is Elon Musk. And the market loves Elon Musk. It wants a piece of Elon Musk. So these numbers weren't crappy. They were disappointing. They're cash flowing. What I'm telling you is this, okay? You're paying 200 times earnings for a stock. I'm not here to tell you to buy it. I'm not here to tell you to short it. I'm just saying, after a while, all of you are going to learn one way or another. If it costs you to lose half your income, you're going to learn you get what you pay for. You get what you pay for. Do you want to pay 200 times earnings for a stock that has declining earnings? If you do, then you buy it. For me, I want nothing to do with this. If I were you, and I'm not you, watch the weekly MACD. It's the most important indicator ever devised. Nothing even comes close in this world. Nothing. The whole market runs on the MACD. That's how it works. So when this rolls itself over, what are you going to do? Are you going to sit there and tell me, don't worry, it'll come back? Because I'd fire your ass. Don't tell me that. If you own the stock, just buy the puts and protect. Sacrificial lamb. But you can't short it. Why? Because it's in a flag formation that's being defended by algorithms. The only way you can possibly short this and make money, because it went down to about 413 and rallied $18, because the dippers think this is cute and funny. Let's buy calls. It's Elon. Okay. If it breaks underneath 400, it's the end of you. Because if it breaks underneath 400, it's going to take you, the MACD, and the RSI with you, and you're not getting out of this. If I were you, just buy the puts and pray. But if you want to take a short trade here, which I wouldn't yet, okay, you're going to be confounded because those who bought this early in the year don't want to sell it because it's a window dressing gem. It's a psychological, like, my portfolio's suck and I run $1 billion, but my clients won't fire me because I own Tesla. Tesla's financial porn. That's why nobody wants to sell it. The earnings, they were not terrible, but they were disappointing as hell. This company is not growing anymore. You're buying a tech stock that has no growth. You're overpaying for it. But because of what it represents psychologically, that's why it doesn't go down. I'm not going to short it. I'm not going to buy it. But if you crash this below 100, damn straight, I'll take a look at buying it. Not overpaying for this. Good luck to all of you out there. From Dawn to Musk. Good luck. I have nothing to do with it. Okay. Blue in the face. For those of you who are educated, who've been around the business a while, IBM trades on the big board. It's been trading on the big board almost as long as any stock out there. Seriously, for like 60, 70 years. IBM's nickname is Big Blue, because if you look at IBM's logo, it's white and blue, but they call it Big Blue. That's why I call it blue in the face. But blue in the face has a double meaning. It's a double entendre. So blue means somebody's holding his breath and he's dying and he's asphyxiating and ready to die. IBM could have crashed and burned today. It should have crashed and burned. But the dippers could not control their bowel movements and had to just basically step out there and throw in calls. Please buy it. The only reason people are buying this is because it's financial porn like Tesla. The market is gung-ho on buying anything that's defended by an algo, and that's defended by an algo. If you look at this stock and watch what it did today, it opened at 263, and immediately out of the gate, look at the money flow. Everybody in the world, like 1 billion calls were burst. Everybody bought the dip. Everybody. Why? Because it's a video game. It's Xbox, right? Take a look at that money flow. Are you short? You're dead. It's not going down today. So if I were you, I'd cancel my short trade right now. That's not a recipe to go down. That's what we call a flag formation. It's intact. So I can only tell you one thing. If you worked for me and you shorted this, I would fire you. You're just fired. You cannot short a flag formation that looks like this. It's just not going to play. It won't. unless it breaks underneath 275, and the algos will fight tooth and nail to keep it above 275. The stock reported 265. Great numbers. But apparently, one analyst didn't like the numbers in one of their divisions. Get bent. The numbers were good enough to keep it here. So the stock opens down on this analyst's dour downgrade, but it comes back up. Why? Because the market at times, not all the time, it's smarter than the analysts. It ran it back up. This stock doesn't trade at 33 times earnings. That is not technically true. The stock trades technically at about 25 times earnings. So I'll fix that for you. Would I buy this stock? I would not. Would I short this stock? I would not. But I can tell you this. Based on the Genesis Cog model, if this sucker rolls over here, I'd short the hell out of this thing simply because it's not a bubble. It's not even close to a bubble, but it's overpriced. It's just overpriced. You can't short ahead of it because on the 11th, on the 10th, they're going to pay a $1.68 dividend. So every 100 shares you short, you're going to be tagged for $168. So for me, hear me out. Don't short. Wait till the 11th. Watch the weekly. When it breaks, attack it and short the crap out of it. My gift to you. Next on the list. Okay. Intensive care unit, surgery. Dr. Bierman, surgery, intensive care unit. Okay. A couple of lessons to learn from this. There's no trade here. So forget the idea that you're going to tell me there's a trade. You're out of your mind. There's no trade here. Forget it. Why do I bring this up? Because after the debacle at United Healthcare, Warren Buffett steps in and says, I ain't gonna buy United Healthcare. So he makes $100 on it. What do all the money managers do? Because the money managers are like brainless. They're literally like they're like the zombie. It's like a zombie apocalypse out there now. They're like, Buffett's buying and it's not financial porn. I better buy. Because if Buffett doesn't buy, they won't buy. That's the fact. They just won't. But here's Molina Health. Oh, Molina Health. Look at the numbers, people. Look at them. $1.84. And the estimate was close to $4. So if you're wondering, why did this crash? You need look no further. So for every one of you out there who preach to me and tell me your fundamentals suck, okay, eat it. Look, they work. Look how much they missed. They're blowing that sucker out. Now, they're not going under. And the PE ratio is really, really, really low. But here's the rub. Low PE ratios can go lower. So now it's down to a PE of 9. It was sitting at a PE of 11. So if you thought 11 times earnings was cheap for this stock, you would be wrong. The next time you go out and trade a healthcare stock, and I'm not talking pharma, I'm talking a healthcare provider, make sure you don't pay more than 10 times earnings. Because if you do, this is what might happen if you miss the earnings. And guess what? They dunked CNC. They crapped on that one too, Centene, because Centene's in the same business. Centene only got tagged for 7%, whereas Molina Health got tagged for 33%. When you tell me value doesn't matter, I'm going to push back on you every time. It does matter. It just doesn't matter until it actually does. And then they just imploded the thing and run it to high hell if it's too expensive. Centene is not an expensive stock, but they got problems. If Moline's got problems, Centene's got problems. It's across the board, people. Last but not least, on coverage today. Viva Las Vegas! Okay, Las Vegas Sands is running and gunning. Were I you, okay, I would not short this stock. You're dead, okay? Would I short this? Hell nah, no way, baby, okay? Look at the earnings. The earnings were well above estimates, okay? Then Sheldon Adelson, who's the owner of the company, said, we're going to make more. So they upped their guidance on here. That means it's unshortable. That is a Genesis Cog breakout. You cannot short that. And if you do, I'm going to fire you. Don't short this. You don't short vertical. It's a Maribosa. For me, it's too late to chase it. Too late to chase it. I don't trade ahead of earnings. But here's what I'm telling you. You realize that people have made a lot of money in this market. And when they make a lot of money, what do? It's called mad money, drunk driver money. They just like, no problem. If I made a lot of money in crypto and I've made a lot of money in the stock market, guess what they do? Yep, they go out to Vegas. People go to Vegas for two reasons. When they're super rich or super poor. When they're in between, they don't. When they're like feeling, I got poor, I'm down 90% of my cash in the stock market. Well, they're going to throw the stock market, flush it in the toilet and go, how do I make my money back quick? I lost that 100,000 in the stock market. How do I make it back? I know, let's go play craps in Vegas. So they go to Vegas. The other part of that is they say, God, I'm making so much money in the stock market because I bought every dip and made 200,000 on options this month alone. We'll just go to Vegas and blow money on the card and craps table. That's why it's up. So for me, when the economy is doing really badly, I want to look at Las Vegas. When the economy is doing really well, Las Vegas is usually up. But if the economy is just grinding away average, that I won't look at it. This is a function of people who have too much money. They've made too much money in the market. This is also a sign of a market top for people like, let's just go to, why would you spend money in Vegas? Why wouldn't you go to like Fiji? Why wouldn't you go to Paris? Spend your money on something that's cultural. Why would you go waste it in Vegas? Because you're so rich, you feel like you could make more. And if you blow it, you don't care. That's what that means. This is another sign to me of a market top. Believe it or not, it's a sign of a market top. Not a good thing, okay? Upward and onward. Now, I'm going to finish off two more tells today. Two more tells. By the way, didn't I tell you that I wouldn't short this market yet? I told you. Peter Schrader, no, I'm not shorting it. But I am short Southern and I am short Walmart, and they're kicking ass today. So yeah, I'll be short things, but not this market. I won't be. I'm not foolish enough to do that yet. So I'm going to go to, and we're going to look at today's two different factors, two different catalysts, two different tools, two different tells. We're going to look at the money flow check and the ADX check. ADX check, money flow check. So the whole thing I keep telling you about this market is, this market is completely driven by linearity. It's the new normal. Linearity is the new normal. And if you can't accept that, I think you should just quit the business and go lawn bowling. Do something else with your life. It's all linear. Take a look at it yourself. It's all manipulated. It's all run. It's suffocated and hijacked by algorithms. Do I like it? No. But what am I going to do about it? Complain about it? Who's going to listen? Nobody. Nobody cares. The SEC loves it. The market makers love it. The Wall Street hedge funds love it. Why? Because it guarantees them money because nobody can trade against them if the machines are going their way. It's only when the machines are trading against them, like Leon Cooperman goes, we need to curb those algos. Like during the COVID, when the market was crashing and burning, Leon Cooperman actually championed to actually shut the algos down and have them eviscerated. He wanted them bounced out completely. That Cooperman came on CNBC and said, we need to get rid of the algos or we need to shut them off. Really? So it's a two-way street, Leon. When it goes up, it's okay to leave the algos on, but when it goes down and we short sellers are making money, that's not okay. Can't have it both ways, Leon. All right. Pulling out the trusty tool. Here's your linearity. You can't see it? Let me bring another one to you. Here's your linearity. You can't see it? I'll bring in 100 different graphics. You can't see it, TheoTrade members? It's linear. It's a line. But it moves. But it's a line. Okay, they're curbing it. It's like pounding chicken. They flatten it out. It's a line. See it? Okay. Here's the deal. You can't short upward lines. You can't buy downward channels. And when it's sideways channel, you can flip the coin and play it both sides. So here's what I'm telling you. This is a two-sided trade. You can buy, you can sell. Okay, you can trade both sides of the market in a flat line. In an up line that's ascending, you can only buy. And in a down line, you can only short. That's up, sideways, up. So you can buy, you can short and buy in this one, and you can only buy in this one. How's that working out for you, those who listen? Yeah, you're making a lot of money. Okay, that's the linearity. But it ain't that simple. There has to be a checks and balance system embedded in this for you to make money. Don't exclusively trust the candlesticks. They will lie a lot. Don't exclusively trust, only the channels, although it is the most important indicator to me. You need to complement it with a suite of indicators that validate what you're seeing or reject it or invalidate it. If you get invalidation, don't take the trade. If you get full validation, put your ass behind it, put money in it, and take that trade. That's what we do at the Genesis Cog, and we're doing just fine. Now watch. This is up, consolidation up. But you need to add a couple more things here. Now, there's a couple ways you can go about this, There's many ways you can go about this. I call it the money flow check. The money flow check. And what I'm saying is this. If you have no knowledge of the market, you've never heard of a MACD, you don't know what a moving average is, you don't know what an ADX is, you're looking at Don go, I don't understand one thing about those stupid Greeks. I get it. You don't need that. My daughter's 12 years old. She walks in my office and says, Dad, what's that? And I show her. And then she's like, oh, I guess that means I should buy. And that's a 12-year-old. Yes. What you need to do is track the money flow. Remember, they used to have that. I always get this wrong. So, why rob banks? I forget who said that. Willie Sutton. So when they caught Willie Sutton, he said, why'd you rob the bank? He says, because that's where the money is. If all you ever did was follow the Laszlo Barini system, all he does is he tracks the money. Guess what Garrett Baldwin does and why he makes so much money? He just tracks the money. It's pretty smart. It's pretty simple, but it's really smart. Track the money. The money will validate or reject the linearity, guaranteed, because it'll move in the same format. Watch. If you don't believe me, then you can just turn this off. Look for yourself. So all of a sudden, at this level, consolidation point, Caterpillar breaks out. June 5th. There it goes. That's the Bierman, Gianni. We call it the icebreaker. Gianni coined it. It's a breakout. That's a Genesis cog breakout. That's like free money. Buy it. Now watch. Look on the breakout and track the money. Here's the money. What do you notice about that money? Okay. While the algos are walking it up and they're curating that channel, it's manipulated. Is money, all you have to ask is one question. Just look at it. Is money going in? Is it going out? Or is it hard to decipher? Is it sideways? Because if it's sideways, don't trust it. What you're seeing here clearly is as Caterpillar is being walked up, money's just going with it. Why the hell would you short that? Why would you do that? Okay. Why the hell wouldn't you buy it? Why would you short anywhere here? Nobody's selling. You're the only one. So you're going to get drowned. You're going to be just drowned by a wave of buyers. That's what that tells you. Then Caterpillar goes sideways. See? Now the money flow does what? It just goes sideways. Look for yourself. People, this doesn't take rocket science. And forget about like trying to be a Canadian engineer. I don't care about your standard deviations. I don't care about your like R squared. Eat it. Just look at it. It tells you exactly what you need to know. Money is what? It's kind of going in and out. So don't buy it. Don't buy it. Don't short it. Don't buy it. Just watch. It's a flag. Flagpole flag. Oh, look, it breaks out again. What should I do, Professor Bierman? I don't know. Track the money flow and then draw the channel. It's that easy, okay? All this thinking. Everybody's like, I'm a what rocket science? I'm a professor with an MBA and a PhD. What do I just look at the number? I'll look at the drawings like a 3-year-old. Oh, it's up. I'm like, okay, I'll buy it. I don't fight this stuff. I tried for 10 years. Doesn't work. Just follow what the algos are doing. Check it out. Here's more institutional money coming in. So it's breaking out. Well, who would have thought? The difference between the accumulation distribution and the money flow, very subtle. Accumulation distribution calibrates in shares. And if you're using a futures product, it calibrates in contracts. That's it. The money flow calibrates in notional value. Notional value, there he goes again with those hyperbolic, confusing words. No, slow down. Notional value is not shares. It's not contracts. It's market cap. It takes the price of the underlying, Caterpillar, 516, and it multiplies it simply times the volume. That's all it does. That's all it does. So this is just straight like, price times volume, calibrated in shares. This is price times volume calibrated in market cap size. So what you're seeing here is between June 5th and today, Caterpillar's added $36 billion of market cap. Good night, I retire. That's it. That's all you need to know. Pick one, pick the other. They don't mirror each other exactly. Sometimes the money flow will be up and the accumulation will be flat. Sometimes the money flow will be down and the accumulation's up. They don't track each other one for one. There's not 100% correlation. Sometimes they track well together, sometimes they don't. Pick your poison. Don't pick both. They won't work. You got to pick one or the other. You can't have both. I won't let you. It's either one or the other. What's my preference? The shares. I like the share. It's just I've been doing this a long time. I can track shares. So 39 million shares have been purchased over the last 6 months. Bam. Is it a wonder it's higher? Do you even have to ask? Really? Do you even have to look at the candles? If you just look at that and go, wow, 30 billion shares have been purchased. Where is it? Yeah, by default, it's higher. It's hard to short things that people buy. It's easy to short things that people sell, or at least sometimes it is. This is tracking the linearity. So when you see the linearity of the pattern, immediately, somewhere in your study suite, you have to have a money flow check. If you don't, I'm not helping you. This is the most important indicator outside of the lines. It's more important than the candlesticks. It's more important than MACD. Remember, the MACD is a lagging indicator. Moving average, lagging indicator. Everything's like the only leading indicator here is money flow. That's the only one. Money never lies. People do. Your eyes fool you, people. My grandma used to say, I used to go to, when I lived in LA, we would go to the farmer's market in Hollywood. And, we'd go to Dupar's, which is the most famous pancake place in all of LA. Really crowded with my grandma, God rest her soul, like 25 years ago. And one time, you walk in there, and I always ordered the triple stack when I was like 10 years old. And my grandma used to say, are you sure you can eat that much, honey? And the waitress would come out and say, your eyes are bigger than your belly. I rarely ever finished. I'd buy the 3-stack, eat 2, and take the other one home. She was right. That's what the market does to you. The market makes you see things that are not there all the time. Like you bite off more than you can chew. You take bad risks, and it burns you. I'm telling you, watch that money flow. It will never lead you in the wrong direction. Notice here how Caterpillar is going higher. What's the money flow doing? It's not going higher. That's a sign of a market top in Caterpillar. That's how you know. Look at it. If you don't believe me, I'm not saying to short it. Okay, I'm not trading ahead of Caterpillar's earnings. I never trade ahead of earnings. We don't do that at Genesis Cog, ever. We either get out of the trade or we hedge it. I'm telling you, Caterpillar's walking up, but money's not going in anymore. That's a mark. That's a sign Caterpillar's in a topping formation. But as Caterpillar's being walked up when money flow's coming in, that's not a top. That's a top. That's not a top. That's the difference. If money flow starts to go down, as this is going higher, that's a bearish divergence setting up for a massive fall. That means Caterpillar is just going to be implode. It's going to fall apart and implode. It's going to get just killed 30 to 100 points, guaranteed. Watch the money flow. See how money's coming out as it's going higher? The market's nervous. The market is getting out. Institutions are getting out while you're getting in. The algorithms only do one thing. They defend upward slopes. So they defend that linearity. They're defending this. Look how they're defending. Even today, it's up 2. Well, duh, they're defending the line. But if it goes through that line and then all of a sudden the money flow goes down lower, good night. You're going to crap a chimp. You're going to oh my God, it's down 12. Exactly. They'll just blow through here. 2 institutional trades will drop at $50 and you're done. Be very careful how you tread here. The money flow defends you. If it doesn't defend you, get out of it or hedge it. It's defended by the line. It's linearity, people. This is the new normal. But in order to negotiate the new normal, you have to track money flow. If you don't, good luck. You're in big, like rolling the dice here, people. It never leads me wrong, ever. I watch money flows all the time. I'm the guy who said, go in there and buy some of that Schlumberger. Yeah? How's that? How am I looking now? See my money flow? It defended me, people. That's why I loaded the boat here. I sent out a Genesis Cog reminder. Jordan, I did. Genesis Cog to all the members. Buy today. Right now. Load the boat. Buy now. Schlumberger. And it was down at 32. And none of them questioned my logic. Now look what's happening. We're all up $4, people. Look how it's looking. The money flow never lies. Okay, your candlesticks, but it's downward. Don't care. Somebody was loading the boat. I want to join in. So the algos are buying it, the institutions are buying it, and my Genesis Cog members, we're doing A-okay. We're looking good here, people, and it ain't done yet. Look how much is coming in. Ooh, this is good. It's not just short covering, it's institutional covering. Now, the second part of today. There's a second part of today because it's a 4-day week here. Okay, whoa. Okay, people, I told you I am short Walmart. Look at how we doing on Walmart, people. I'm short Southern. Look at how we're doing on SO. Didn't I tell you? The MACD and the money flow never lie. I got it right, spot on. Okay, here's another one for you. Ready? ADX check. Now, I covered the ADX about, I think it was like 3 weeks ago. The ADX is an oscillator, but don't mistake what the ADX is. The ADX is a component part of the DMI system. The DMI system was conceived by Wells Wilder. God rest his soul, the best technician ever. I read his book. It's the best book I ever read on, I've ever read on technical analysis. They all these new age guys. Ugh, go to the old school guys. They know better. All right. So the idea here is, and I'm going to go to John Deere. John Deere. We're going to go for a bearish one. Here's the thing I want to tell you. ADX is not a directional indicator. That's the irony of this, because the DMI, the name of an acronym DMI stands for directional movement indicator. So the DMI tells you what side of the trade to be on. And it's not based upon a moving average. It's based upon range movement, range adjustments. The differential between the two indicators, the DI plus and DI minus, okay, DI plus means bullish, DI bearish, DI minus means bearish. And if the plus is above the minus, you buy. And if the plus is below the minus, you sell. It's like the easiest system I've ever seen. Like literally, like you could be like, no knowledge. You walk in day one and go, I'm 30 years old. I know nothing about the market. Great. I'll teach you the DMI in 15 minutes and you can go ahead and trade the rest of your life. You can do it that easy. The ADX is not understood very well. The ADX is the differential between the two of them. So you take the DI plus reading and the DI minus reading and you subtract. That's what you do. So what it does is it actually measures the differential, okay, between the DI plus and DI minus. So what I've done is I've added the ADX in its own isolated subgraph. So when I worked at, Thinkorswim TD Ameritrade like 100 years ago, God, it seems like 100 years ago. It's like over 10 years ago. I left 10 and a half years ago. Okay. And I was like, there was 4 of us who were the brainchild who built this. It wasn't just me. There was Cindy Faber, there was Tom Preston. We all built the genius behind all of this. And I said to the programmers, I was like, listen, I know I'm a pain in the ass, but could you do me a favor? Can you take certain indicators that are complicated, that have many, crossover lines? Can you isolate them? And they looked at me and grumbled and said, yes, but it's going to cost you. I'm like, I don't care. I'm not paying for it. Go to Tom Sosnoff, bill him. And they did. So they built the ADX separately from the DMI. So this is the ADX right here in red. So what this does, this subgraph is it grabs the ADX and then it just separates it from the DI plus DI minus. So here's what the ADX means in, no uncertain terms. It's not a directionally biased indicator. So when you see it go up, don't say bullish. That's wrong. Totally wrong. You just flunked. You flunked. That has nothing to do with it. Going up means strength. And strength could also mean weakness. So what I'm telling you is when the price action goes up in that linear format and the ADX goes up with it, it means that the strength of the trend is solidified and getting stronger. When the trend goes down, which is what this is doing, because if you look at it really carefully, and the trend has been broken, by the way. See how the trend is going down? I'm going to adjust the lower one. Activate. I'm going to get the lower one down. So I'm going to get this little sucker down. Okay. So there's the line. See the linearity? You can't buy it. You can't buy. There's no buying this at any price. But I made a bounce of 10. Don't care. You could make 10 to lose 50. Oh, look, it went down 50. Told you. You can't buy on the way down. The rules are steadfast. You can never buy on the way down in the Genesis Cock. It will not work. It never works. See how it's going down? So you let it go down until it bottoms and breaks the upside. See how it broke to the upside right there at 458? Okay, there's your buy signal. That's it. If you bought it at 458, you're good to go. Now watch. The ADX helps you identify whether or not the line will stay intact or the line will implode and break and melt down. It's one of the best indicators I've ever seen. So here's what this does. You have 3 levels. You've got 30, you've got 25, and you got 20. You have 3 levels. So it's a little off, but we'll just go with it. You have 3 levels. So here are your 3 levels. When it's below the 25, it means it's non-trending. When it's below 20, it means it's not only non-trending, you have no chance to read any part of it. So when you see it all the way down here, it means that deer is untradeable. You can't pick a side. There's no bias. It means no bias. Every day you walk in and trade, you're flying blind. You're falling to earth with no parachute, and you can't see the ground. You're going to die at some point. You can't make money trading this. No chance. When it breaks above 20 to 25, it doesn't mean it's trending. It means it's trying to establish eventually that it's going to make a trend sooner or later. Once it gets above 25, it's trending. Once it gets above 30, man, it's trending hard. So 25 plus means moderate trending. 30 plus means aggressive trending, means it's totally, you cannot trade against it no matter what you think. So what you see here is when deer breaks down underneath here and takes out this support level, okay, the fun for the short sellers like me, but this is where guys like me clean up. This is how I put my kid through college. Like I have a college fund for my kid because my daughter has like a list. She has Yale, she has Harvard, she's got Notre Dame on her list because I got to come up with $200,000 to put my kid through college. I know that. I've got it, but I need to make more. So I'm sitting here going, okay, I got to put my kid through college. When deer breaks, okay, that's a technical breakdown. Can't buy it. It's linear. It's a short. Now what? Bring up the ADX. If the ADX gets above 25 and this starts walking down, get balls to the wall short. It means the trend is solidified as bearish. You don't believe me? Get short at 480. Get short at 466. Get short at 450. I don't care. You're killing it. You're going to send me a love letter going, oh my God, it's like finding uranium. It is. It's one of many complementary indicators that I did my research. I know all 575. I was the guy on the platform. I know them all. 90% of them are a waste of time. 90%. You could just look at them and go, flush it, get rid of it. Useless. This is useful. Very useful. All it does is tell you, do you trust the line or not trust the line? That's it. Once it breaks underneath and goes into the 25, it's telling me, keep staying short. But if it goes under 25, okay, that downward trend is not solidified anymore. It's not. It can go in either direction. But if it gets above 30, it's telling me one thing, that this trend is really strongly downward. But if it starts to get towards that 35, 40, it means the trend is overshot and it's time to exit. So anytime it trends between 25 and 35, here's what it means. Take that trend and ride it. But if the trend gets above 35, back out of the trade. Start to scale out of that trade because you can't sustain above a 35 forever. It's like like Corey says, there's a mean reversion to the trend strength. So ADX is an oscillator that measures trend strength. So whether or not this goes down or up, okay, don't worry about it. Worry about the ADX trending. If this is going down and the ADX is going up, like, oh, the ADX is going up, okay? The thing that dominates is the trend. The ADX does not dominate. The trend does. So if the trend's going down, then defer to the ADX. Don't do it. It's not the late. Don't put the cart before the horse. Don't do that. This is the horse, okay? That's the cart. So you follow the trend and then watch the ADX. It's not the other way around. If this is going down and the ADX is going stronger, ride that sucker to hell. You'll make a lot of money. But if this breaks underneath 25, all bets are off. It means that that trend is no longer like it's no longer on that linear track. The linearity, it's out. It means that what we call like the stones in place to hold it, you know, the girders are shaky. They don't work anymore. Okay. Here's another one for you. Check this out. Here is Reddit. So here's what I'm showing you. Reddit breaks out on earnings right here. Now what? Okay. Genesis Cog tells you, go ahead and buy it. Why can you buy it? Because we buy breakouts. We buy breakouts. We're Gianni DePoci fan. Love Gianni DePoci. Linear. Okay. Now what? breakout, linear. Should I buy this? Go right to the ADX. If the ADX is above 25, load the boat. There you go. Send me a love letter. You owe me big time. Look, bam. Look, they go together. This is strength. Now watch. All of a sudden, it goes into another sideways configuration. What do we do now? We don't trade it. We don't trade sideways configurations. You can short it. Why? Because it broke the linear channel. If you break the linearity, you can short it. If it doesn't, you can't short it. That's the Genesis Cog rule. It breaks the linearity and goes sideways. Doesn't mean it's a short, but it means it's vulnerable to going lower. But what do we know about the ADX? Is the ADX still above 25? Then it's unshortable. That's how you know. Now, if this breaks underneath here and the ADX goes through 30, now you know you have a puncher's chance at making money short. You do. Look what happens to Reddit. It goes back up another leg up. But as another leg goes up, Reddit holds at 35, which means it's still a buyable. That's still buyable. You can still buy that because you're being defended by the ADX. But if the ADX breaks underneath 30, all bets are off. Check this out. Now, all of a sudden, Reddit's in a downward sloping channel and the ADX is holding 29. So what this is telling you is that this Reddit is officially a short. Now, I'm buying it. Wrong. You're wrong. You should be shorting Reddit now, not buying it. Why? Because you're in a downward sloping channel where the ADX is above 25. It's a moderate short. So if you had gotten short up at 217, you'd still be ahead. But you could still get short here because you're being defended by the algo channel and being defended by the ADX. If the ADX goes vertical, completely vertical on Reddit, if it breaks to 40, right there, this is what's going to happen. Reddit's going to blow out and fall $30, $40. That's what's going to happen. Watch the strength. If all of a sudden the ADX breaks underneath, that means that Reddit could do what? Actually go back up again. It's possibility. Possibility. So they go hand in hand together. ADX check, money flow check. They will not lead you wrong. Let me prove to you on Deer how this would have helped you. I'll just show you this. Here's Deer, and I'm going to add back the accumulation distribution. I'll prove it to you. Look. Deer is going down. Where's the money? Willie Sutton, where's the money? Didn't I tell you? Money's flowing out. Then why are you buying? Why? Why are you buying everything everybody's selling? That's why you're losing money. Buy what people are buying, sell what people are selling, buy what algos are buying. Just follow the money. Money's going out, trends getting stronger. That's a killer short. But not right now, it's not. Why not? Because the ADX is being called into question and they're washing out the short sellers. They're washing them out. Now it's starting to look like almost like a buy, but not yet. That's the trick. I'm going to throw this out before I turn this over to my cohort because I got to do a Genesis Cog. Boy, my account is flying today. My biggest, one thing I'm disappointed in, I do own Gap, which is doing well, GAP. But unfortunately, in my own Schlumberger, but the one weak hand I've got here, unfortunately, is BJ. My BJ is down 93 cents. Can't make money every day. All right, here's the last thing I'm going to throw out. On this Genesis Cog, okay, when you join the Genesis Cog, you will see this periodically, okay? The Genesis Cog rules of engagement, okay? These are our rules of engagement. Trade with the algos, you buy into uptrends. You short into downtrends. How easy is that to understand? Indicator slopes drive price direction, momentum, and trend duration. That's a fact. Algorithmic price channels, right? They drive our trade entries, our trade exits, and they map our risk. These are the 8 bullet points that drive the Genesis Cog. In January, I'm going to do a Genesis Cog full-on 12-week retirement program. It's 12 weeks, so it's not just the Genesis Cog trading rules. It's the time value of money, it's technicals, it's fundamentals, it's software. 12 weeks, an hour and a half, I'll pack it in. You'll love it. We did it last year. I do it once a year because my schedule will change. I'm teaching a class starting in 2 weeks through the winter. In between that, I'll get a couple of days a week freed up. I'm going to open up a master class. Send me an email. I'll keep it on file. We'll start to advertise sometime in December for the master class. Learning the rules of engagement will divorce you completely divorce you of emotion. I will turn you into a robot, which is what you need to be. Because the algorithms, they got no emotion. They're just robots. I go to bed at night and I never lose sleep about anything. I don't have enough exposure to get my account blown out. I don't wake up and go, damn, 5% loss. A bad day for me is like a 0.5%, even on a massively bad down day. Market today is flat. I'm up about a 0.5%, about a little less than 0.5% on a long short account. Yesterday, when the market was down 40, I was up about $800 in this account, which is a 100K account. That's about almost 1%. The idea for me is I'm not a hero. I'm just trying to make you money every day. Some days I will, some days I won't. But I'm always keeping you in the game, So come back tomorrow, and what we'll do is we'll do part 4 of walking the line, negotiating the new normal pattern, which is lines. I'm just trying to help you understand how to read the lines and how to validate them. If you can do that, okay, success will come your way. In the meantime, I'm going to turn this over to Brandon Chapman. Brandon Chapman, how are you?
I'm doing good. How are you doing?
Brandon, I am short Walmart. I am short utilities. I short everything everybody else won't short because it's financial porn. And I will because I know they're financial bubbles and because they fit the Genesis Cog footprint. That's why I did it.
That's good.
Brandon, what do you think about following the rules? Should we ever not follow our rules? What do you think?
Right. And the thing is, like, what you just shared was extremely important, right? Because there's trade management and there's portfolio management. You have to do both. And most people are just focused on the trades and the performance in those trades and how fast can I grow my portfolio, but realizing there's a two-edged sword to this thing, right? That if you don't manage your money properly, if you don't engage in portfolio management, the other side of that sword can be very sharp as well. So you got to get both sides together in every process.
Brandon, I know this sounds crazy, but when I wake up to trade each day, I only have one prayer. Don't lose a lot of money. Like I wake up and I'm like, I'll make money most days, but I just don't want to lose a lot of money because once you do, Brandon, you fall into that. I'm behind the 8 ball. I got to play. And then your whole system unwinds. You know what I'm talking about, right?
Absolutely. And that's the thing is like for Ghost Prince, I have like, you could take virtually every trade we do with a $2,000 account. And so the idea is I have units and everything kind of money management's built into that. And you're not going to have everything at risk all the time. Trading spreads, for example, right? Normally you're probably 30, 40% tops, so it's just, you got to get both sides together. You have to be able to be wrong and not put yourself in the hospital, in the emergency room.
I hear you. All right, buddy. Have a great day. I got to roll to my next Genesis
Cog
weekly update at 11:30.
There we go.
Yeah.
Have a good one. All right, let's get rolling. I'm going to share my desktop with you. But again,